Happy Friday, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup. Today is April 24th, 2026. Ron Quaranta here with my amazing co-host, the one, the only, Josh Klayman. David Brill could not join us today. David, safe travels. Airlines are always fun, but we are expecting a special guest. Hopefully, Adam can join us shortly. But Josh, let me start off with the usual disclaimers for everyone in the audience. Thank you so much for joining LinkedIn Live, X, YouTube, I believe. Our usual disclaimers, obviously, anything and everything we're discussing really are our own personal opinions and not necessarily the opinions, lost Adam, not necessarily the opinions of our respective firms, and nothing we're discussing really is any sort of investment or legal advice. Our special guest today, the one, the only, Adam Goldberg. Adam, welcome to the program.
The pool looks nice, Josh.
Oh, it's Ron knows. My real background is far less exciting.
It's one of the mansions, Adam. She won't tell us which. Josh, Adam, let's dive into it. And again, for everyone in the audience, thank you so much for joining us. If you have questions for Josh or Adam or I, put them in the chat. We'll address them as quickly as we can. Adam, Josh, one of the things that continues to boggle me is Washington, D.C. Adam, I'm going to kick off with you, buddy, because if one more person texts me and asks about clarity, I'm going to lose it. Adam, what's the sausage making down in D.C.? Talk to me about the Clarity Act.
Well, actually, we may have gotten some relatively good news on that front today, having nothing technically to do with the Clarity Act. But there was news today that the DOJ is dropping its probe into Jerome Powell, the Federal Reserve Chair. That was seen as kind of clogging up the schedule in the Senate Banking Committee because there was uncertainty as to if and when he might be confirmed, because Senator Tillis, who is also a very big part of the Clarity Act discussions around the stablecoin yield compromise, had made clear that he will not vote to advance the nomination of Kevin Warsh to be the next Fed chair before Jerome Powell's chairmanship is up on May 15th without this criminal investigation into the Fed building being closed by the district attorney in Washington, D.C., Janine Pirro. We got news today that that probe is closing at the DOJ. They're saying they're going to open a separate inspector general investigation, and the Senate leadership has also said there will be some oversight from Congress. But that potentially clears out some of like the potential blockers in the banking committee. So now, I mean, we have very few legislative days left. At this point, it does not seem likely that we would have a markup next week, so it would not be in April. But we could potentially get noticed of the markup of the hearing next week now that the Fed is deal with. They will have to reschedule a vote for Warsh to vote him out of committee. So they will have to have a meeting of the Senate Banking Committee to do that. And likely that will happen in the next 2 weeks before May 15th. So he can make it to the Senate floor and be confirmed prior. But that is basically where things stand. We are still waiting for kind of those guideposts we've been looking to. And I feel like I keep repeating the same message, but till we actually have bill text released and a committee markup schedule, it's hard to say it's going to go forward. And obviously we're getting to a very precarious timing. Very few legislative days in May before essentially they go home for the Memorial Day weekend. And then we have the August recess, and there's very few times this could happen, and we really wouldn't want it to slip. So that's kind of where we are today.
Adam, thanks so much. And Josh, yeah, go ahead. Just jump in, Josh.
Oh, no, you were going to ask a question. I'll ask my question right after you.
So Adam, I appreciate the perspective. And I remember not too long ago, the three of us and so many WSBA members were talking about these big critical issues related to the Clarity Act moving forward. And it was yield, and it was ethics, and it was DeFi. I'm sort of stunned, because I'm not a Washington insider, Adam, that this stuff, and I'm going to use this provocative phrase, kind of gets held hostage to things happening in other jurisdictions or venues, meaning the Fed and, kind of DOJ. Am I wrong to be surprised?
I don't know if you're wrong. It's just the Senate. So this would be a different story if the calendar wasn't getting so tight. And one of the problems that you have about us pushing far into the spring is that we get very few legislative days left, and then we're also in an election year. And we're also in an election year where the control of Congress is expected to flip, if you believe the betting markets. I think as of today, I haven't checked the Senate odds. I know they were 50-50, but the House is, I think, like 78% or whatever, which betting market you use to flip to the Democrats. We've also seen a record number of Republicans retiring and leaving Congress in anticipation of the chamber flipping, because it's far worse to be in the minority in the House than it is to be in the majority. So you are seeing a lot of people head for the exit doors. That does complicate things significantly from a timing perspective. When you do need to see these Senate Banking Committee markups, you do need to see the bill get to the floor. There would be amendments, there would be cloture votes. So this is one of the consequences of this taking so long, is that now we are like left with very few legislative days left to actually get it done.
Josh, weigh in on this. Go ahead.
So mine is really a question. So I understand, Adam, from what you're saying, that getting rid of this probe right now, it's helping in terms of unclogging the backlog. But where are we, do you know, with the whole hot button topics? So my recollection is that we're down to just a few. I think one is yield, obviously.
Yes.
And another one is DeFi. Now, I know last weekend, I think it was last weekend, time is flying by, we heard about that hack, right, that occurred, and it was leading some to call, not that I want this to be the name of the year, but some were calling 2026, I think, the year of the DeFi hack or something like that, at least in a headline that I saw. How much does the unclogging help? And are we closer on the issues, or do some of the current events that we've seen potentially pull us further? I have no knowledge on this. That's why I need your expertise.
So setting the table, as Josh says, the two main issues, as far as have been publicly articulated, are this stablecoin yield debate, which, as far as I know, is settled. And the settlement may not be good for passage, but it's where we are. The settlement is they came to some compromise language that the crypto lobby can live with, and the banks oppose. And the banks are opposing it and lobbying against it, and are expected to impose clarity as a result, because them and their lobby disagree with where the eventual compromise landed. Now,
for the viewers, Adam, are you at liberty to share what the compromise is?
I haven't seen the language, but as far as I understand it from people that have, what it would do is basically make it so you couldn't have any rewards on passive stablecoin balances, but it would permit rewards for loyalty-based programs or for transaction-based activity if you met a certain threshold. This is widely seen as trying to create certain exceptions that Circle and Coinbase can drive a truck through, so they can have their existing arrangement not be threatened, because if their existing arrangement was threatened, it's unlikely they would support the bill. So that is the understanding of what the compromise will lead to. There are different interpretations of this proposed language. I have not seen it. Then secondly, so that is one of the reasons the banks don't support it, because they still say, well, basically Coinbase can still pay yield on USDC balances. What are we doing here? That should be banned. So that's kind of their position. And then on a greater sense, we have been looking for more clarity on the DeFi piece. We've seen different iterations with it, between the two different Senate Agriculture Committee proposals. The one had the DeFi title completely reserved. The other one that had more robust DeFi language that I think many in the industry support. I would say that I think you can make two arguments about the events of the weekend and the last few weeks. If you could, basically, if it either could be an impetus to say, hey, we need rules here. That's very important. We need to pass the Clarity Act because all these hacks are going on in DeFi, and if we had regulation, it might prevent them, and we might have some rules of the road. You could also say, as many banks are now saying, well, this is so risky, we might not even want to touch it. So I think it's a kind of give and take. But I still think you can make an argument that this is why we would need clarity, because we want U.S. leadership.
Adam, thanks so much. And Josh, it's a really good question. Adam, let me jump into that point, though, because I think it's important. And it wasn't too long ago, Josh, Adam, that we were talking about the bank lobby pushing against, let's call it the crypto industry at large, particularly Coinbase and the Circle relationship there. I'm sort of a little stunned by that, Adam, and I'm curious about your take and Josh's take. In my mind, the bank lobby was just indomitable. There's no way, the crypto industry is going to beat the bank lobby. And I'm not saying that it did, but I'm a little surprised that it hasn't had more of an impact on the bill. Am I misreading those tea leaves?
I don't think you're misreading them, but the thing is, it would have an impact. We might have clarity already, if not for this. Like this,
right,
led to significant delays in the potential timeline. And this also generally, as far as the crypto industry is concerned, from a lot of people in it, this debate was settled. Like we had
right.
we had an entire bill and regulatory scheme that was created for stable coins, and now we're redebating the same debate because the banks feel like they lost the battle last time, didn't like how it ended, and they're like, okay, well, now we get a second bite at the apple.
Yeah.
So I wouldn't say that their power has been significantly diminished, only in that because it has been delayed. Like we don't have a bill, we don't have a scheduled markup. We're now almost into May. We were hoping this was going to happen last year, so it's like it has taken considerably longer because of the bank lobby's opposition.
Yeah. Let me rephrase that, Adam. And I guess what I'm trying to express is I didn't expect us to get this far at all, given the bank lobby. So it is a bit telling to me. Josh, go ahead.
I was just going to say, I know we sometimes refer to the bank lobby, but the bank lobby isn't a monolith. And
yeah,
I do think that there are some banks, including one potentially that, may have written a note last week that was picked up in certain industry publications, although I didn't actually see the note, that are very hopeful that the bill gets passed and becomes law. And that, while there may be some types of banks that feel very threatened by stable coins, I think there are other banks that are very invested in the space and are very, they would like to see the bill passed, and
without naming names,
not just because of that.
Yeah, without naming names, Josh. To that point, I get the sense you're talking about size.
Yeah, I'm thinking about the difference between some of the more global banks that may have really publicly come out and said that they're moving into this space versus perhaps community banks or something like that. And whatever, I mean, there's lots of different kinds of banks. So
and I don't mean to cloud the waters about it.
No, not at all. I would love to know if anyone does have any greater visibility into within the bank lobby. I
think almost always in these debates, I mean, the bank lobbyists are smart and they know that the most sympathetic potential victim here, if there is a victim, is your local community banker who makes your small business loans and knows the people on Main Street. It is hard to fight on behalf of the corporate profits of JP Morgan or some of the other larger ones. So I think a lot of the position of the banks is they're moving into this from a financial infrastructure perspective because they do see the promise of blockchain technology and they do see that it can improve the way the financial system operates. I think some of them are being more aggressive and actually trying to create business models out of this. And as you said, some are even forming their own stablecoin. I think it's notable that CME, I think it was reported yesterday, is going to try and launch their own stablecoin and be federally regulated from a banking perspective to do that. Obviously, they're very large in futures markets and derivatives markets. So I think there's a lot of movement towards the space. And obviously, the administration being so positive, and obviously the Trump family being involved in crypto ventures themselves, has kind of created that playing field to do that. Some of that hesitancy we may have seen in the past may start to return as people start to receive congressional subpoenas investigating their crypto activities. And obviously the regulators will be in place at least through this term. But if the administration was to turn over in 2028, then you could be seeing a whole new regulatory landscape, which may give the banks pause. One thing I will note about the news we discussed earlier, Kevin Warsh is seen as very pro-crypto and has, as far as I know, has some investments in this large $100 million portfolio that he runs for himself that are crypto-related and seems to be very open from a Fed level. Yeah. So I think that is one thing, chairmanship, regardless of kind of what happened in this administration, chairmen of the Fed generally span administrations, so you could see even in let's say the administration did move over, we would still have maybe an accommodative Fed from a crypto perspective.
Let me dive in on that, Adam, because we talk about this a lot, and Josh, you and I have spoken about this, particularly in the legal working group. I don't want to prognosticate about elections, either the midterms, Adam, nor the next presidential election. But I guess my question is, given how far from a regulatory perspective we've come, Josh, you and I half joked about regulators have tried to create as much structure as possible vis-a-vis crypto in the absence of legislation that is about market structure. How much could a new administration, Adam, actually reverse some of that, given the developments in the ecosystem and how it may develop in the next 2 to 3 years?
I think it definitely can reverse some things if
Really?
they're not codified in law. Because a lot of these things, I think you saw this, I think there's a letter today by a big industry group where they want the SEC to come out with formal rules to implement the guidance they just gave a couple weeks ago that that certain DeFi platforms or user interfaces that are software interfaces, if they meet certain conditions, such as not like payment for order flow or other things like that, they wouldn't be considered a broker dealer if they're dealing with digital securities. So there's a letter today specifically asking for them to move forward and write a rule on that and make it a final rule rather than a staff interpretation. And the exact reason they're citing is this exact debate. Well, this is a staff interpretation. The second there's new staff, they could have a different interpretation. Yeah. So the more you cloak yourself in the Administrative Procedures Act, the more you get the protection of the Administrative Procedures Act. So if you go through a notice of proposed rulemaking and then you pass a final rule, even if the next administration wants to repeal it, they then have to go through that same process to unwind it. So that does take time, and it does give the industry time to mobilize, articulate their view, tell them why we think these rules are good and that you shouldn't change them. But it is much harder to undo a law, which is why people were so happy Genius got passed. And even as much as we debate Dodd-Frank now, I mean, Dodd-Frank hasn't been substantially repealed because it's very hard to repeal something that got 60 votes in the Senate, even if you have united control. At no point have the Republicans, since the Democrats got 60 votes in the Senate for Dodd-Frank, have ever had a 60-vote even coalition to repeal Dodd-Frank. They went after a couple pieces. They could get Democrats on like community banking and designations, but substantially the law is still intact just because laws are hard to repeal.
Josh, I heard staff guidance and my brain immediately fearfully went back to SAB 121.
Well,
and I know SAB 122 sort of fixed it, but that was pretty traumatic. Josh, go ahead.
Well, I was just going to say, going along with what Adam said, I mean, in addition to it being hard to roll back laws or change laws, I think one of the other things is, and we've talked about this previously, now that there's no Chevron deference, in the event that someone were to bring a lawsuit, and we know there are some players in the industry who may not necessarily in our industry, but some players who may not want a move towards being more permissive for crypto native companies. If they were to bring lawsuits saying, hey, these are, this is outside of the statutory authority of the SEC, for example, who knows how a court might rule, right? And so I do think, but that being said, I've said this a few times, like, I think it's a lot easier to prevent seeds from being planted than to pull out like the roots of trees once they're planted. And I would imagine that if there is a new administration, which of course there will be a new administration, if they were to try to roll back, some of the guidance, yes, they could potentially, but depending on how embedded in the crypto space and entrenched in these rulings, some of their donor base may be, and that could involve TradFi, that could involve crypto or others. Maybe they're disincentivized, or at least not incentivized to make certain big sweeping changes if it would harm their constituents.
Josh, Adam, thanks. Shout out. Ryan Soriano, hi again from London. Welcome to the program, Ryan. And again, everyone who's watching, thank you so much. If you've got questions for Josh or Adam or I, please put them in the chat. Josh, Adam, given the background of all of this, I've got to go to market dynamics, and David and Josh and I, the three of us text about this regularly. We've got Bitcoin around 77, 78. It's a pretty chaotic background globally. I'm just going to say it, Adam. It's between the Congress and what's going on there, and Clarity Act moving forward, and regulation, and then you weave in some geopolitical concerns, and then you weave in some political concerns. Are either of you surprised? It seems to me, relatively speaking, we're not at highs, but crypto seems to be holding its own. I would have expected bigger downdrafts on this. Do either of you have an opinion about that?
Oh, yeah. I mean, I think we've been in, I wouldn't say like a pretty tight range, but I think the range at least we're currently in now is better than the previous range of like fighting to get to 70 or hold 70.
Yeah.
So I think when it's closer to 80, that's better. I do think that the market generally has been searching for a catalyst. I mean, obviously we have the war going on in the background, and I think every day when it looks like the war is getting hotter, markets and rates seem to go down. Markets go down, and then opposite, like something like today, where you hear that the Iranian foreign minister is flying to Pakistan, and there might be peace talks, and the Israelis yesterday agreed to extend the ceasefire. The market kind of sees it all clear. I think crypto, like the market, like if just left to its own devices without all this other stuff, would probably be doing maybe better than it is right now.
Yeah.
Like at least if you look at the market, one of the reasons it's doing well is like corporate profits are doing great. So it's like the market's supposed to be related to earnings.
Yeah.
Earnings have been great, and we're seeing like I don't know if I checked it recently, but I think like I saw Anthropic's run rate went from like 5 billion earlier in the year to like 30 billion plus now. And Nvidia is the most profitable company in the world. So it's like in the history of the world. So it's like we are seeing substantial wealth creation in the tech sector in the United States. So without some of these kind of outside factors that may be predestined, I think that's what you're seeing in the market. Like the market wants to go higher, it wants to set records, but it has to keep staying back. I think that's similar with crypto, where it's kind of, it probably wants to go higher, but wants some of this Clarity Act, other stuff. It wants that kind of certainty to really then say, okay, now we could just move forward. We don't have to worry about some of this other stuff. I think one of the things that's been positive this week, I'll just note from that, is the ETFs from Goldman and from Morgan Stanley. I think both those announcements were positive, and obviously I think the Morgan one's already trading, so I think they're already buying in the spot Bitcoin market. So I think that's probably a good thing for overall prices and demand of Bitcoin.
Go ahead, Josh.
So I was going to say, like, yes, Bitcoin is approaching 78 or wherever it is right this minute, which I haven't checked. But how are the alts doing? So I wish David Brill were here, because he's, all knowledgeable about alts. But maybe you guys know, like, when we talk about how crypto holding its own, I mean,
the top coins are doing better. The alts are doing bad.
Are they doing bad like today? Or like, I know they've been doing poorly for a while.
They're lagging in the aggregate, Josh. So if you and I tend to look at the alts from an aggregate, there are a very small handful. This is not alts advice for anyone watching. I'm not recommending any alts at all. But if you look at it from almost a fear greed perspective, I'd say it's 70% towards the Bitcoin angle or the Bitcoin end of it versus the alts end of it. And I agree with David. Shout out to David Brill again. There are use cases there that make sense. I just think in the chaos and noise that we're seeing, that gets lost. And that means there's not really good price action there. Josh, yeah.
Understood. Like that alt season is not happening right now, and hasn't been for a while. But I guess while we have seen Bitcoin creeping back up, have we seen any kind of shift upward in the aggregate in the alts or at the top, or is it getting to be an increasingly large margin between, or a change in trajectory, right, where the difference in trajectory is growing?
Yeah, I mean, I do remember alt season being deeply, deeply negative earlier this year. It's not quite as deeply negative, and I apologize. I keep looking this way because I've got a terminal going here, Josh, which is shocking, but we're not shocking. I'd have to dive deep into that. If David's in the Gulf Stream and got Starlink running, you might be able to let us know. But the alts have been lagging for a long time, and it makes me wonder at some point some of those are going to have a leg down that might be representative of the ones who don't have use cases. Adam, I don't know how much you spend time with alts.
Well, I think I just generally look at alts as I treat like less liquid, more
Yeah.
speculative equities, which is very similar. Is like at a time where
They're the pink sheets to Adam.
I wouldn't say exactly, but like when there's like, I think it's one thing you've seen across like the DeFi ecosystem, for example. Like
Sure.
Athena's been having a really tough time because essentially what Athena is just like a spread account for long demand. So like
Yep.
people that want to lever up to go long, and that's essentially what it's reflective of. We just don't have a ton of long demand right now. Like it's not a super speculative time. Mostly everything, at least the stocks connected to crypto, the main cryptos are all trading like 40-50% lower than their all-time highs.
Yeah.
So I think to see alts really take off, like we've seen, like alts usually have a great time, like when we're in mania phases, like when we were in
Sure.
the pre-FTX phase, when we were in the beginning of this, like the Trump administration with the Melania coin and the Trump coin and all different coins being launched. It's like it's usually that rush of speculation and irrational exuberance that leads you to essentially go down lower on the capital scale.
Yeah.
And I think when you're in an environment like this, where people are just trying to grind out whatever returns they can get, hoping that they're going to get a catalyst and see a blow off top at some point, it makes that argument to go like lower grade tougher.
Yeah, and I still have personal opinions, Adam, about whether or not folks in public should be issuing tokens, but that is a happy hour conversation off air. Josh, David, we talked about something earlier this week at one of our working group meetings. As a matter of fact, I think every working group meeting touched on it. And Adam, you raised it a bit earlier. The kind of DeFi hack that we had seen that really is percolating through the industry. I won't get into the details of it, but Adam, Josh, one of the things this reflects for me is that bridges in the crypto ecosystem are something that really haven't gotten the attention they need to quote unquote, what I'll call modernize or get them up to the speed that global markets are looking for. Adam, Josh, why is that the case? Is it so misunderstood that people aren't touching it? What are your perspectives on bridges for the DeFi space? And what does that do to the ecosystem from the perspective of Washington, D.C.?
Well, first of all, I think not a lot of people really understand what bridges do.
Yeah.
And essentially what a bridge does is allow you to create synthetic exposure to one asset on one chain and make it live natively on another chain. And ideally, if they're functioning properly, you're encumbering the underlying asset on the main chain, right, so that your token on the new chain is backed. I think the whole hacking incident that we got into is Aave is now left with a lot of bad debt because the North Koreans spoofed the bridge to mint tokens, making like the protocol think it was backed, but there's really nothing backing those tokens. I think one of the problems, I think you see this a lot as industries mature. I think we even see this in the financial industry. When you're dealing with derivatives and externalities of one asset based on another asset, based on another asset, based on another asset, those can be very complex and go wrong in very cascading ways. And I think that's one thing crypto more generally might need to be mindful of, is like there's a reason that it's heavily regulated. We have tons of rules around derivatives, is they're very complicated and they can get out of hand really quickly. And I think I joke, but I saw like a Twitter message where it's like Res ETH is like wrapped Wes ETH, which is a liquid staking token of pledging a derivative of another liquid staking token. It's like 7 steps down till you get to the Ethereum on the main chain.
Yep.
Like that may be a little problematic.
Adam, I don't know if you recall, but
because that means you have to underwrite every single one of the steps in the setup to get to the extra, like the final point, and that's really difficult.
Yeah, David, sorry, Adam. One thing, real quickly, Josh, if I could, I was joking on our crypto asset working group yesterday, and I said, "This derivatives of derivatives of derivatives. This feels very much like 2008." I got more than a couple of like side-eye glances from some people on the working group call, but Josh, weigh in, please.
Yeah, I mean, you guys say derivatives of derivatives of derivatives. Where my mind goes is sort of the same thing, but I think rehypothecation again and again and again and again. And whenever we see rehypothecation, or whenever we've seen it in our space at least, but also in other spaces, this, I mean, the risk gets spread around. The risk also is, it causes interconnection between different entities or companies or teams or projects that you wouldn't necessarily on its face expect. And I think bridges, just in general, they're highly vulnerable in a lot of cases. Sometimes it's because there's like a centralized point of failure, maybe with like fewer validators, like we saw with the Ronin bridge hack. I think we also saw that with Axie Infinity, if I'm remembering correctly, a while back.
And one DVN setup here where North Korea, they did a DDoS attack and knocked off all the other nodes, compromised one node, and single node validation is how you got here.
Yeah. And to that point, I just want to, adding to what Adam had noted, this was a very sophisticated attack.
Yeah.
Adam. This was in planning for weeks, if not months, as I understand it.
Yeah, as far as I understand it, they did a denial of service attack on all the other nodes, brought them down, forced all the traffic to their compromised node, did authentic messages to all the on-chain surveillance sites, only sent the fake authenticated message one time to do the attack. And then immediately, once they got the money out, the code was self-executing and essentially blew itself up and deleted all trace of anything that was there. So it was a very sophisticated attack.
Yep. Josh, I cut you off. Go ahead.
Oh, I was just going to say, like, another thing is like the attack surfaces, like the complexity of them. Like if you have a bridge connecting two different blockchains, right? Then you have things like you're combining smart contracts, validator codes, all kinds of things like that. Off-chain sources sometimes. And so the more surfaces that you have like this, the more opportunities potentially for a bug or a security challenge. Anyway, I know I'm preaching to the choir here. I'm just, for those at home who are not.
No, I think I think Josh makes the central point. It's it's increasing the attack surfaces, because basically when you're like a protocol like Aave, now you have to underwrite every single protocol you integrate, every bridge that they integrate their protocol to. It's just, it makes doing risk management much more difficult.
Yep. Adam, I know we've got a short time. We're making it a short show today. Josh, Adam, thank you both so much. There's still so much to cover. Adam, we'll have to get you here for an hour or so next.
If we finally get a markup and a bill to read, I'm happy to do a page turn. We can go page by page.
Looking forward, buddy. For everyone who joined, thank you so much. If you've got additional questions for Josh or Adam or I, info@wsba.co. Let's leave it there. Have a great weekend, everyone. See you next week.
Bye-bye.
Bye, guys.